Hello and welcome to Business Talk TV with me, Greg Wright. We're delighted to be joined today by Roy Kaitcer, an investment manager at Redmayne Bentley in Leeds. The major banks have published their results in the city, and many of them are enjoying improved fortunes. But have they finally regained the trust of the public? Roy, do you feel now that the banks are finally on the road to recovery?
They're certainly recovering after a very, very difficult 10-year period since the financial crisis. I wouldn't say we're quite there, but I think we've improved a tremendous amount since over the last 10 years.
There were interesting results last week from some of the major players. I mean, just talk me through the highlights. I mean, some of them really have shown an improvement in their financial performance.
Yeah, okay, not in any order. On Friday we had Royal Bank of Scotland, who showed their first profit for 10 years, although there will be some exceptional items which will drag them back into the red later on this year. I think the two best reported banks were Lloyds and Barclays. Lloyds indicated good dividend growth, so shareholders will receive a greater income, and Barclays, they showed an improved performance as well.
Do you believe now that there's been a lot of a crisis of confidence in the banks in some ways? There was a financial crash of 2008. A lot of people were very concerned about the way the banks were run and their governance structure. Do you believe now that banks have finally got the house in order and we can feel confident that they are now well run and well managed businesses?
I wouldn't like to say that we've drawn a line, but as I say, we have seen improved fortunes, we've seen rebuilding of balance sheets. They're supposed to have a ratio to make them more comfortable for investors, etc. That's improving as well. And I think generally speaking, when we get PPI out the way, which is, there's been a lot of write-offs with PPI, that's going to be ending quite soon, and that will surely, hopefully, mean that we're virtually there, basically.
There are quite a few legacy issues for the big banks as well. Talk me through some of the legacy issues that some of these big banks are facing.
Well, PPI has been the main one of late, undoubtedly. Of course, if you go back to the financial crisis, we had these pass-the-parcel loans, which resulted in calamity for the whole financial sector in 2007, 2008. And of course, the most important thing is the day-to-day running of the business, the economy. If you look at Lloyds, for example, the majority of their business is mortgages, and it's UK-based. So if the UK economy were to turn down, don't forget there's a lot of uncertainty with Brexit as well, then that could mean that it could drag down their performance.
Because it's very important that people have confidence in the banks because of lending, and obviously small businesses particularly want to have a good relationship with the banks because they need them to support them. Do you feel the SME sector has got confidence in the banking sector? Again,
that's improving, but if you cast your mind back again to 10 years ago, you had Lehman Brothers going bust. In the UK, we had HBOS, which were rescued by Lloyds. We had Northern Rock, which went, and so on and so forth, and it was a very, very difficult time. But yes, there is much greater confidence in 2018.
Do you think that RBS, which is taxpayer-backed, will soon be returning to the private sector?
Well, they're the one that's actually most sort of private-backed, and I think it will take some time because I think the government still owns a huge chunk. Of course, Lloyds has now been freed from that, but I think it'll take a great deal of time until we see Royal Bank of Scotland in that situation.
Do you believe that the banks themselves have undergone a cultural shift? There were significant issues with the way many of the banks were run in the years leading up to 2008. Do you believe the banks, in a sense, have learned their lesson? They understand now that the way they behaved in the years leading up to the crash were not acceptable, and they now understand that they must keep their house in order?
Yes, no, if you read in the press over the last 6 months to a year, they reckon that the next bust in the cycle will be lending on cars. Will that bring the banking sector down again? I don't know. It's a worry because I think with low interest rates, people have borrowed money, say, to buy cars. They've taken on mortgages because interest repayments are very low. We've seen interest rates go up from 0.25% to 0.5%. Well, that's a doubling of interest payments. You don't think of it like that. And of course, as they keep on going up, that'll be further pressure on the consumer.
Because people are used to being in a situation where rates are extremely low.
Sure.
Do you think we're all in for quite a rude awakening in the near future? Because at some point, these rates are going to go up again.
Don't forget, when you're looking at interest rates, even at 0.5%, these are virtually historical lows. And yeah, you're right. You know, when you've got to make a normal repayment of, let's say, 3 or 4%, people might get a bit of a shock, actually.
And finally, do you believe that the banks' enhanced performance will continue in the future? I mean, looking at some of the underlying trends in terms of their performance, do you feel that if you invest in the big banks now, it will be a sound move? Or is that a difficult question to ask you?
No, it's not a difficult question, actually. I mean, each bank has got its own idiosyncrasy. I mean, you've got Barclays, which have seen disappointing returns on its investment banking. They've had a new chief executive, a guy called Jess Staley from America. Lloyds is more domestically focused, as I said, with the mortgage market. They're offering a good dividend yield of probably approaching 5% for next year. You've got HSBC, which we haven't mentioned, who are driven by their presence in Asia, although they are global. They've been particularly strong. They've got a good dividend yield of 5% as well going forward. Royal Bank of Scotland, not quite returned to the dividend list yet. So it's a sector which people should have in their portfolios, but I wouldn't be going mad over the sector just yet.
Roy Kaitcer, thank you for joining us.